On today's Hot Sheet, I'm discussing Jerome Powell's testimony today on the House Financial Services Committee. Yesterday was the Senate. We've got the June CPI data, big day, and weekly unemployment. Today is Thursday, July 11, 2024. I'm Byron Lazine, and the Hot Sheet starts now. Okay, let me know in the live chat which market you are tuning in from today. This is a packed day. We've got more Jerome Powell clips. We're going to walk through those as quickly as we can, and then we'll get into CPI. CPI's got some encouraging news. What is that going to mean for the Fed rate cut, potentially coming sooner than we imagined? Is that going to impact the 30-year fix? Has there already been an impact on the 10-year and the 30-year? Get into all of that. What you should get into is the link down below for BAM BBQ. This is a free event next Wednesday, July 17th, which will be 1 month from the August 17th date. BAM BBQ is completely free. We're going to be giving away some of Christmas conversion code book. There might be some other giveaways as well. Here's the lineup. It's absolutely incredible. We'll be talking about some of the changes looming in the industry. BAM BBQ, free virtual event next Wednesday. Make sure you sign up on the link down below. Now let's get into Jerome Powell. Today, this is semi-annual. If you weren't with us yesterday, this is a semi-annual testimony that he delivers to both the Senate, which was Tuesday, and then the House, which was yesterday. So this was planned. This isn't something that Congress sprung on him and said, Jerome, we're dragging you in to Capitol Hill to speak. This is on the calendar. It happens every single year. And that time of the year just happened to be now. So Jerome Powell speaking to the House yesterday. If you missed some of the commentary and the back and forth that he had with the Senate, that'd be on yesterday's Hot Sheet. You can go back and obviously watch the replay here on YouTube. Make sure you're subscribed to the channel, or you can listen to the replay on Spotify or Apple. Love to see a Hot Sheet review on either of those platforms. If you have those on your phone, it'd be greatly appreciated. All right, let's get into Jerome Powell's first question and answer. This one came in. Where did this one come in? It has escaped me here. I'm missing there we go. The Hot Sheet show notes. By the way, here are the Hot Sheet show notes for you. We have every single timestamp. So if you find something interesting Jerome Powell said about housing, you want to use it as a headline, you want to copy and paste it into some type of your content, all the CPI data, the weekly unemployment data, it's all available in your Hot Sheet show notes. For BAMX members, of course, use code HOT to get into BAMX and get a discount on that. So about 12 minutes, 30 seconds into the testimony, we had Maxine Waters from the House, ranking committee member for this committee, which is the House Financial Services Committee, ask a question. And we're only covering questions that relate to housing, of course, here. So this is the first question related to housing. And let's go to Ms. Waters here, ranking committee member, and her question.
That works for everyone. Now, while I'm pleased to see that inflation is declining, the latest data makes clear that housing remains the #1 driver of core inflation. Since 2020, house prices have increased by nearly 50%, with Americans now spending on average over 30% of their income on housing. This is a top priority for Democrats, but remains an afterthought for Republicans. Earlier this Congress, I reintroduced my comprehensive legislation housing package, including the Housing Crisis Response Act. This bill provides more than $150 billion in fair and affordable housing investments, representing the single largest investment in affordable housing in our nation's history. These funds would create nearly 1.4 million affordable and accessible homes, bring down housing costs for all, and revive the American dream of home ownership. Committee Democrats are committed to getting this bill across the finish line and continue to hold out hope that our Republican colleagues will finally join us in this effort. Unfortunately, extreme MAGA Republicans are not just ignoring housing inflation, they're advancing their Project 2025 manifesto that would dismantle U.S. democracy and the economy as we know it today. Project 2025
Go to
is
23-minute
authored by
mark.
almost 24 former Trump White House staffers
Yeah, go to
and
23.
Trump
She's going to go on
administration
a rant here.
officials.
23.
It was compiled and published by the
Yeah, he
2%.
responds at the 23-minute mark.
Is well down from its peak and now stands just a bit above its 2019 level. Nominal wage growth
Are you
has
at
eased
23?
over the past year. The strong labor market has helped narrow longstanding
No, you're at
disparities
20, 23.
with the operational independence that is needed to take a longer-term
All right,
perspective
cut
in the
that off
pursuit
there
of
for a
our
second.
dual mandate of a maximum.
All right, so let's go to Jerome or to Maxine Waters' points there before she went off the rails and went completely political. This is supposed to be. This is the problem with some of the testimonies here is they mix in stuff that's not all this stuff that she's talking about. The political warfare between the left and the right has nothing to do with Jerome Powell and what we're trying to accomplish here, which is getting, obviously inflation down and maximizing employment and all that kind of stuff. So let's focus on what she said in the beginning there. She's got a bill providing providing more than 150 billion in fair and affordable housing investments, representing the single largest investment in affordable housing in our nation's history. She claims these funds would create nearly 1.4 million affordable and accessible homes. Okay, so we've got 150, and then I'm going to I'll just read you Jerome's response to this because it happens a little bit after all of the other stuff that she goes through there. So we got 150 billion investment here from this is a bill, so that's coming from the American people. 150 billion. Obviously, we send that amount all over the place. So why wouldn't we spend it on ourselves? But we'll just go ahead and put that into 1.4 million, right? And so what is the math on that? Can we get the math on that? Is that looks like 100,000, 107,000 a unit? That would be pretty good if that's the case. I don't know if that's the case. If somebody can fact check me on that. Can you do that? So I'm not doing it on my phone. So you got 1.4 million units into 150 billion. What's the cost per unit there? I'd love to know. So Powell's response was Congress has entrusted the Fed with the operational independence that is needed to take a longer term perspective in the pursuit of our dual mandate of maximizing employment and price stability. Okay, we remain committed to bringing inflation down to 2% goal and keeping longer term inflation expectations well anchored. Restoring price stability is essential to achieving maximum employment. So he's basically just sticking it to Miss Waters, where he's like, okay, I don't know, you went on this little rant. I'm reminding you, Miss Waters, what our public mission is, which is, by the way, mandated by Maxine Waters and her colleagues in Congress. So Congress, the House, which Maxine Waters is a member of the House, the Senate, we heard from the Senate yesterday. So far, the Senate questions, I would say, are beating the House questions. And they have mandated to Jerome Powell that the FOMC gets inflation down 2% and maximizes employment. That is it. So whether, he can't really even, tell you, is this a good bill or not? 150. Did you get the number? Would that be price per unit? What is the price? 107,000. So 107,000. I'd love to know the plan. How does that get pulled off? 107,000. Would that be something that Americans should invest in? 150 billion to create 1.4 million affordable and accessible homes at a cost of 107,000. Love to know where the cost is, how big are these homes, all of that kind of stuff. And so she's talking about the dream of home ownership. She's not talking about rental things. So there's a lot of buzzwords there that I like. I'll tell you that. I like home ownership for more people. So there's some stuff there going on that I'd love to know more about. This isn't down payment talk, which you hear a lot about. Let's help people's down payment, which could ultimately just push up prices on existing homes anyways. All right, there you go. So that was Maxine Waters, and then Powell. I read his response, which was nothing in relation to really her bill. All right, now we've got Mike Flood from Nebraska, who keeps it focused in on housing here. Let's go to Mike Flood, Nebraska. This is about an hour and 20 minutes into the testimony, where he asked a question about housing costs.
We go ahead and move, but not until then.
Appreciate that. Finally, I'd like to raise concerns with housing costs. While shelter is one component of the broader PCE calculation, housing often makes up one of the largest, if not the largest, expense for many consumers. Inflation for housing remains persistently high. One of the characteristics of this economy is that consumer sentiment is remarkably low. Do you think high housing costs could be contributing to the persistently low consumer sentiment?
I think high prices generally. I think nobody really can be super highly confident of their answer on this, but I do think it's the fact that while inflation has come down, prices are high. If you know what I mean, and people are paying more for things, more for housing, more for the essentials of life, food, energy. And that to me is how I would explain surveys. We say that the economy is growing, inflation's come down, unemployment's low, and all that's true, but prices are high.
Thank you, Chairman Powell, for your answer and your testimony, and I yield back.
And so prices are high, and guess what? That's the problem with this economy, and that's why people feel like, or a lot of people feel like the economy is not working for them, because the prices, when the people look at just their life and how they rate the economy, just, people that you're working with every single day, they say, well, prices of everything are high, and those prices aren't coming down even when inflation comes down. The prices are stuck. They're at what they're at. You're not going to see prices of a lot of the goods and services that people, have to pay for every single day come back down. It's that they're not going to be going up at this elevated, 3, 4, 5%. They're going to kind of stay at a 2%. That's the goal, right? Moving up 2%. Think about it. Is your homeowner's insurance that maybe has just doubled on you going to go down or keep going up? Is your car insurance going to go down to 2019 prices, or is it going to keep going up? Have you ever had property taxes move down on you? Probably very few, right? Over time, those are always going to go up. Do you expect to walk into the grocery store in a month and be back to 2018 and 19 prices on some of your favorite items in the grocery store? Do you expect, all of the things that you buy, the clothing, the different items that you need, to go up or to go down or stay the same? Probably the safest answer is staying the same or going up here in the near future, not necessarily down. We just need to, what they're trying to do is tamp down the rate of these items going down. Okay, we had Willie Nickel from good old Willie from North Carolina, who had a question in regards to housing. It's about an hour and a half into the testimony. Let's go to Willie.
Plan on working with you.
Or Wiley. Is it Wiley? It's not Willie.
Very much. Big issue for the folks that I represent, housing. The rising cost of housing hits my constituents especially hard in North Carolina. Our ranking member, Maxine Waters, has made this a big priority for the work that we do in the committee. In North Carolina, we've got 343,000 households that spend over half of their monthly income on rent, leaving little money for other expenses like healthcare, transportation, and food. Access to safe and affordable housing is essential to the well-being of working families and individuals in North Carolina and around the country. Chair Powell, despite the strong economic trends you mentioned in your testimony, housing prices and median rents have increased by nearly 50 and 41% respectively since May of 2020, and they continue to rise. In fact, housing costs continue to outpace modest wage gains. High interest rates continue to add to those costs. For example, high interest rates make it more expensive for home builders to finance new housing. High interest rates also cause landlords to change higher rents and lead to higher mortgage costs for would-be home buyers. I know that you and your colleagues at the Fed are correctly focused on bringing down inflation, important goal, but have you considered that at this point, with housing cost increases being the primary driver of inflation, keeping interest rates high only towards that stated goal?
So a couple things are happening with housing. There, before the pandemic, there was pretty serious housing shortage, and we can't do anything about that. Then the pandemic comes along, and we really think the best thing, the most important thing we can do for the housing market in the medium and longer term is to get inflation under control, so that interest rates can come down, so that we can get back to a more normal interest rate. No one knows exactly where interest rates will go, but they'll be lower than they are now. And the housing market, supply and demand will work their way out, and you'll have supply of housing. There's still going to be a housing shortage at the end of that, though. And it's true that our policies work through interest-sensitive spending. Housing is maybe the most interest-sensitive form of spending. Buying houses on with a mortgage. We know that we have really significant effects in that market, and it's tough on people. But this is the path to getting inflation down, which will bear fruit for many, many years.
Thanks so much. I don't think I'm going to be able to get in my next.
Well, sorry, Wiley. Too bad for you. Would have loved to have heard the question. So many, many years to come, getting inflation down, which will bear fruit for many, many years to come. Remember, we didn't have inflation issues until, for 4 decades, really. Generally speaking, we didn't see it in the, once we got out of it in the 70s and the 80s, the 90s, 2000s or 2010s, and now we're seeing it. So maybe Jerome's right there. If we get out of this the right way, it could bear fruit for many years to come, meaning we live in low inflationary times and allow some of these markets to work naturally and normally. I think we'd all agree from what we've seen in 2020, 21, early 22, having an interest rate that gets down into the 2s on the 30-year fix, that is also not going to create a healthy market. So Powell said, I don't know how low rates are going to go down, but they're going to go down once they start cutting the Fed interest rate. We have to do that at the right time. And again, he doesn't know how low they're going to go, but what would be a number that could create a normal market, a more of a flowing market where you get more supply that he alluded to coming on, because you get some of the sellers that are locked in or feel like they're locked in to come on to the market. Obviously, you're going to bring in more buyers into the market when these rates get lower. Is that 5? Is it high 4s? Is it just high 5s? Do we just need to get to maybe 6? What is that sweet spot to really let the market work with some fluidity? All right. We also had a conversation from Brittany Peterson. She's from Colorado here on this House committee. And there's a little bit of a back and forth here between her and Powell. Let's go to Miss Peterson.
Continuing to feel with rising costs. And you touched on this. I really appreciate the discussion around housing in an earlier question, because this is the greatest inflationary costs, especially in Colorado, where we have seen significant home price increases.
A lot of people moving to Colorado.
The lack of supply, people are unable to move because they would go to a much higher interest rate, and then people are unable to buy because they can't afford those mortgage payments. And so while you've talked about recognizing that lowering the interest rates will actually help with addressing the housing crisis, we still have a lack of housing supply. So can you talk a little bit more about what's happening, and that the lower interest rates are only a piece of this?
It's a longer term thing, and a lot of it is it's harder to get lots and zoning and materials and workers, and in many metropolitan areas, the near in areas are all built up. If you look around Washington, I grew up near Washington D.C. and it was countryside,
really?
Just a couple of miles outside the Beltway.
You're a
there was
local
no
guy?
Beltway when I was born, but ultimately,
Shocker.
it's just we have not enough housing, and that was true before the pandemic, and certainly the pandemic did slow down housing construction. I think we'll get back to a more normal economy with lower interest rates and those sorts of things, but we're still going to have housing shortage.
Absolutely. When I think about the other pieces of the fallout from the global pandemic and the changes that we saw in our economy was in commercial real estate. And I've continued to read about regional bank failures and the risks that the commercial real estate poses in the long term for those assets being on the books for our banks. What is your insight on the risk that it poses for our financial stability and what we should be thinking about here in Congress?
So the commercial real estate situation, which is, it's significantly downtown office and related retail and things like that. This is something the banks have been working their way through for the last couple of years. I think it'll take more time, more years to work all the way through it. We know from the stress tests and from our own work that the large banks, they're going to be okay here. Some of the regional banks and smaller banks.
The rest of his answer is the banks are working through it. We know about this. We've been working through it. The banks are in a good position. They have liquidity. They have a reasonably not too optimistic assessment of how much capital they'll need. So, he said that all year long since we had the bank issues in the beginning of last year. The banks are in a good place. We're working with them. We're advising them. Don't get too worried. We just reported, or just covered the report here on the hot sheet in the last few days that commercial banks, it might have been the end of last week, but not commercial banks rather, but commercial offices in particular, now for the first time ever recorded, have gone over 20% vacancies to 20.1% on the vacancy. So I agree with Ms. Peterson. I think this is a bigger issue than they're alluding to, especially if rates don't come down in the near future. A lot of these office buildings this year are having to get refinanced or are due early next year. And if the the investors holding these commercial office buildings have to refinance at these rates, and they have a vacancy up over 20%, which right now is the national average, 20.1, they're going to be in some trouble. And they're going to say to the bank, you do take it back. And the banks, listen, whether Powell wants to, say it, it's simple enough to see it. The bank balance sheets are highly inflated by these commercial office building assets. And they're just kind of hoping that it's going to work its way through. I don't know that you're going to have a rush back into the office to the degree in those city downtowns that maybe they're crossing their fingers and hoping will come to fruition. Okay. The other thing that Ms. Peterson, was talking about was the lack of the housing supply, and Powell, and he said this many times, said no matter what, even though rates come down lower and the market gets back to a more normal state, we're still going to have a housing shortage. So ultimately, when it comes down to price affordability, that's always going to be the issue until we increase supply in a real dramatic way, in a real substantial way. You're going to have a housing shortage, and our population is growing. So these are going to be things that need to be addressed very quickly, and not just in the Toll Brothers $1 million price range, but in the $250, $300, $350 price range as well. Okay, there's another discussion here from last and final discussion, almost 2 hours into the testimony. Again, we've time-stamped all of this for you. If you think it's relevant for anything that you're doing to educate folks on, it'll be inside of the hot sheet show notes inside of BAMX. Scott Fitzgerald from Wisconsin had a question. Paul had a very short answer to it, but we'll take a look at it.
From those comments.
Very good. There's been a clear trend of banks stepping away from the mortgage market, kind of in the face of
Wells Fargo.
Increased regulation. That's my interpretation, at least. Non-bank lenders have stepped in to kind of fill that void. Today, banks support the non-bank lenders in the broader housing finance system through the so-called the warehouse lending for home mortgages. But I'm deeply concerned that some of the, as was mentioned by my colleagues earlier, that some of the Basel rules could harm both bank and non-bank lenders alike, kind of undermining the liquidity and kind of the raising costs of home buyers. So let me just ask, in regards to Basel III, the endgame proposal Could it make housing finance less stable, I guess, is the question.
So that's certainly not the intention. And we're again, well aware of the, of the concerns that have been raised and, certainly paying careful attention to those.
Despite the smaller issuer exemption for the debit
Okay.
interchange
Well,
fee
debit.
cap, insurers with
Um,
less than 10 billion of assets reportedly lost about 35% of inflation adjusted interchange revenue. Have you considered the impact that further reduction of debt interchange will have on small financial institutions?
Is that off?
Yeah,
Okay.
I'm just gonna hear it for a second.
All right. Sorry. All right. Sorry about that. Mr. Fitzgerald's question there um, on this basic regulation is what he's talking about here. And so he's like, are there going to be less stability in the mortgage finance market? I think that's a concern for obviously that, but it's a concern for all of the sectors of the housing market right now. How much regulation are agents seeing? August 17th is looming. Okay. There's a lot of regulation coming. And at some point, you might see like Wells Fargo, pretty big bank, to be dropping out of mortgages. You might see more and more people just decide, hey, I'm going to go ahead and get out of this deal. Altogether. Okay. All right. Let's go to CPI. And we had a big CPI release here. And okay, there we go. That is off finally. Let me know in the comments too. You're not hearing two voices because that is still running in the background. I'm just making sure you're not hearing um, Jerome Powell blabble on. But that's your update there. The Jerome Powell Senate and now House 2 meetings is over. And let's move to the big news of the day, which is the CPI release, Consumer Price Index, according to the U.S. Bureau of Labor Statistics. The CPI for all urban consumers is out today as of 8:30 in the morning and declined 0.1% in June. This is big news. This is great news, in fact. Okay, this decline of 0.1% from May puts the 12-month rate at 3%. Okay, so that's around its lowest level in more than 3 years. Okay, lowest level of CPI inflation in 3 years. Now, what they do here, I'll go to a Wall Street Journal report from this morning. So what the Fed is going to look at is they're going to say, okay, well, we've got CPI at the lowest rate in 3 years. It's 3%, a full percent above, obviously, the 2% target. Okay. But they'll take that. They'll take tomorrow. We have a release, which we'll just review on Monday, of course, as we go hot sheet Monday through Thursday. But on Monday, we'll review this. They have the supplier report that comes out on Friday. So Thursday's report today is the first assessment of what prices did last month. The report on supplier level prices, reading from the Wall Street Journal, will be released tomorrow, Friday. So the Fed's going to take data from both reports, and then they're going to incorporate it into the Fed's preferred inflation gauge, of course, the PCE, which we cover here. That'll be released on July 26th. Okay, so as of May, that showed inflation running at 2.6. So we get good supplier data, supplier level prices tomorrow, along with this CPI report that we have now, and you put it into the PCA and we get PCE on July 26th, and we get a good report there. You could start to see why the market is feeling more confident, and the numbers went up. They have that little ticker that goes up, the little ticker where they track, what's the Fed going to do? The odds of the Fed cutting in September just went up this morning on this news. So the markets are feeling better. Okay, futures went up on this news right now because the market's been open here for about a half hour. We see that the Dow and the S&P are up a tick, Nasdaq's down a tick, but we haven't really had much movement. It's kind of, I would say, flat. Even though the S&P 500 is trading near record level after the CPI shows this easing on inflation. I'm going to get to the 10-year in a second. I think that's where the big takeaway is for us. But first, let me dive back in deeper onto the consumer price index. So here's a look going back on the year. We've got the first month here where it actually had the tick down 0.1% down to the negative after being flat last month. You see, looking at quarter one, we saw some increases that we didn't like. August, September, we saw some increases that we didn't like. Here on the CPI, the trend, the 12-month trend shows now that we are really consistently moving down on all items, less food and energy. Then all items has been a little bit more volatile, but it's at its lowest level in a year. And both these metrics at the lowest level in nearly what we've seen 3 years. Shelter for June of 2024 went up 0.2%, but in May and in April and in March, it was going up 0.4%. So some easing on the level that its shelter has gone up. Remember, shelter now, this will be available for you, this entire PDF. You can grab this easily inside of the BAMX on the links. Shelter now makes up 36.24% of the weight on this report. Year over year, unadjusted percent change from June to June, shelter's at 5.2%. So shelter's still carrying, a huge load here on CPI data on this inflation, but 0.2% better than 0.4, 0.4, 0.4, which came in the last 3 months. Owner's equivalent rent down to 0.3, upward, being up 0.3 this month as opposed to 0.4, 0.4 the last two rents. Owner's equivalent rent is making up 26.5+% of the weight of this report. Owner's equivalent rent is such a silly metric. It is a make-believe number. It's a survey from the 1980s. I've covered that. If we took owner's equivalent rent out of here, we'd already be at 2% level of inflation, how CPA records it, or even lower. I think we should take owner's equivalent rent of residence out because it's not real data. It's not real-time data, and it's not relevant data, what people think their house or what they would rent their house for if they had to. Okay, these aren't people are sophisticated in that fashion on rental prices. I'd rather look at the declining rental prices that we've seen in real time. Jerome Powell himself has said that we're not going to see shelter data catch up for 2 years. So we're still waiting another year for some of this shelter data right now to really impact things like the CPI. Some of the other takeaways here on the CPI report. You saw gasoline fall 3.8% in June. The index, rather, for gasoline fell 3.8%, and that's after declining 3.6% in May. So that more than offset the 0.2% increase for shelter, which again, the increase for shelter was less than was last month. So energy index fell 2 full percent over the month, as it did the preceding month. The index for food increased 0.2% in June. The food away from home index rose 0.4 over the month. That you could imagine, food away from home. We're going to probably see that throughout the summer. Food away from home, people like eating out, having the, if you're in the Northeast, maybe it's the lobster roll with butter, not with mayo. If you have a lobster roll with mayo, you're insane. It's only lobster roll with butter. Maybe you're eating, some other type of seafood here over the summer, some crab. I've become a crab guy, though. Haley, I am now Florida stone crab, better than lobster. It's not even close. It's not even close. You grew up on lobster, so you don't understand. I grew up on lobster as well. Didn't understand until I really got into the good, delicious stone crab down in Florida. All right. Let's go to unemployment. We had a weekly unemployment claim here, or data here that came out. So Bureau of Labor Statistics released that no, I'm sorry, not the Bureau of Labor Statistics, the Department of Labor released unemployment claims decreased to 222,000, with a decrease of 17,000 from the previous week's level of 239,000. Of course, we're at 4.1% now on unemployment for the first time. That's up from 3.7% for the first time in some while. Highest level we've seen in a few years now. And there are some cracks in unemployment. Let's take a look at specifically where the highest rates were. Jersey had 2.4% for the week ending June 22nd. California, Minnesota, Puerto Rico, and Rhode Island round out the top 5 on highest unemployment. Largest increases in initial claims: New York, Jersey, Georgia, California, and Iowa. And then the largest decreases in initial claims: Connecticut, Wisconsin, Minnesota, Maryland, and Vermont, for metros or states, rather, not metros, states, on their unemployment. But really not a big shift here on the unemployment data. The biggest shift today, and it's going to be a win for all of us, has come in the form of the 10-year Treasury yield. Look at this. This came out right at 8:30. I'll actually refresh the screen here so we can get a real-time update. 4.167. I'll go back to the one-day metric. It is not only a bounce down at 8:30 when the CPI came out, but it's continuing to move down here today. The 10-year Treasury yield, um, which is great news. 4.166 is, I think, the lowest reading we've had in quite a few weeks. This should mean that we remain in the sixes here today on the 30-year fixed. Because yes, that's right. If you missed it, Mortgage News Daily came out with their daily survey yesterday, and it was 6.99, going Walmart style on the 30-year fixed. 6 feels better than 7.01. I get it. They're the same, but it's the feeling. It's how I feel about $9.99 versus $10.01. I like it better. There's a little bit of that mental shift. We're heading in the right direction. This should move lower today off of the 10-year diving down. You could even see it in the 6.8s. That would be relevant news. I mean, if you had a buyer who was looking, just as recently as, say, 2 weeks ago, let's take a look at this. 30-year fixed. Let's go 2 weeks ago. Let's go to this peak here. We had 7.1. I'm sorry. That's we're outside of the dates here. I got to get to what happened here. Mortgage News Daily. Let me just refresh it. It'll be easier. It'll give me the dates that I want. There we go. Okay, so if we go to a couple weeks ago here, 7.34, the beginning of June. So 4 or 5 weeks ago, you had 7.34. Say somebody at the beginning of June, oh, I got 7.34. And then now today, you could hit as low as maybe 6.85 on the 30-year fixed. That's a half a point difference. That's relevant news to bring to the table for those folks in your database who were shopping at 6.34 just 4 or 5 weeks ago, have now backed off, and we may see a reading today that comes in. We may, with where the 10-year is, under 6.9, saving a half a point. That's relevant news, and haven't seen the rush of demand from buyers sitting on the sideline happen. So there's a lot less competition than if the starts to become a trend leading into September and a potential Fed rate where we start moving maybe closer to 6.5 or less. Who knows if that were to happen? You see some more buyers come off of the sidelines, and they'd have more competition. They might have an opportunity here to avoid some of that competition. But yesterday's rating was 6.99. We'll hope to get a new rating today that's obviously lower than that. And I'll hope to see you all. Joe's Stone Crab in Miami. Is it still in Miami? I don't know. Somebody from Miami have to let us know. Joe's Stone Crab. I'm sure it is. It's a pretty famous spot there. BAM BBQ happening next Wednesday, July 17th. We got a whole bunch of giveaways, including a bunch of Christmas book conversion code. A really fascinating conversation I'm going to have with Samantha DiBianchi on the state of the housing market, state of the NAR forms, all of that. She's an independent broker down in Fort Lauderdale, first female ever on Bravo's $1 Million Listing. Really smart. I think that's why she bounced out of the show. She's like, I'm just too smart for this drama. Luca Cree talking about Facebook leads. Chris Smith on what we need to say right now. Paige Steckling on videos that actually convert. Tom Toole on time management. He's a timely man. Even though he did just call me 3 minutes before the hot sheet, and I said, "What, are you insane, Tom? I'm about to start the hot sheet. You know this." He's like, "It's only going to take a minute." And then he tried to Phil Jones me. He says, "I don't know if it's for you," but I said, "Don't Phil Jones me, dude. Don't even try it." We've got Tom Toole and myself have got a new Knowledge Brokers pod tomorrow. So if you like what you get on the hot sheet Monday through Thursday, okay, make sure that you jump over to our other channel, Knowledge Brokers Podcast, or on Apple or Spotify. You can find it in both those places, and check out our weekly recap of what's going on in housing, as well as we get into some of the the realtor stuff. So, we're going to be talking about tomorrow, in particular, the lawsuit between realtor and homes. We're going to be talking about some of where Tom thinks the market's moving. We're going to have a special guest tomorrow as well. Lisa's out. Tom Toole is going to be with us, but we have a special guest tomorrow. So hope you guys can check that out. Knowledge Brokers Podcast, separate channel. Go subscribe there, or certainly if you've been following that, leave a review on Apple or Spotify. That is it. That wraps up the week for the hot sheet, bearing any crazy breaking news tomorrow. Hope everybody has a great end of the week, great weekend. And until next time, good luck.